What's going on, bull runners? Welcome back to the channel. So I want to share in this video my plan for this entire bull run and what's most likely to take place in some scenarios that you guys have to be ready for and the best way to prepare. Because when I got into crypto, I bought Bitcoin in 2017. I was actually in crypto back in like 2013. I was playing video games and getting like some Bitcoin for that, but I forgot about it. I left those accounts, didn't get access to them, probably had thousands of Bitcoin in those accounts when Bitcoin was like around $1, $2. But then I started to hear about it again in 2016, thought it was a scam, thought it was too good to be true, because I was like, what is this? Internet money, these Bitcoins, it seems like some joke. It seems like a video game, right? And then 2017 came around, Bitcoin started to move from $600. I had the opportunity to buy it at $600. Of course, I was dumb. I didn't. I ended up buying Bitcoin at like $3,000 and $6,000. Then on the way up, what I saw happening was the dominance for Bitcoin started to shift. And it started to shift over to Ethereum, and then it started to shift over to altcoins. And just like any new industry, when you see something pop up and it work, and it start to generate a lot of interest, it start to attract a lot of people, then what happens is competitors come into the marketplace to try and gain market share. And that's why there's so many different banks out there, and they're now gobbling up the smaller regional banks for these, massive larger banks like JP Morgan, Chase, and Wells. And so when the space gets diverse, it starts out small, it gets diverse, then it goes back to being congregated. And so we see that happening in crypto, where it starts out small with Bitcoin, then it goes to be diverse, meaning there's over 2 million altcoins on CoinMarketCap, and then it goes back to being congregated again, where the money moves into a lot of different altcoins, and then it moves back into the congregated ones and the large caps like Bitcoin, Ethereum, XRP, Solana, Chainlink, and then the other large cap projects. And so my game plan, based on what I see happening in this industry right now, the main narrative that's moving this industry from collapsing, because you guys see these several narratives going on at the same time, right? There's the macroeconomic impending crash, like the 1929 crash coming, that is still on the horizon at some point, that investors are preparing for. But at the same time too, why is crypto going up while that's at the horizon and people are afraid? It's because there's this great economic shift happening that's larger than the Industrial Revolution, larger than the dot-com boom, and it's the blockchain revolution. It's Web3. And so there's that narrative. There's also the narrative of the ETFs happening, because you see what BlackRock is doing, filing for their spot Bitcoin ETF, and now all the large asset managers that are managing trillions of dollars are getting ready. So why would an investor, a large investor, sell their crypto right now when an ETF has a high likelihood of getting approval? That's the main thing that's holding crypto up right now. Now, there's a few scenarios that I'm going to talk about that could take place leading into January with the SEC on why you should be a little cautious right now, but at the same time too, I'm more bullish than ever before. But here's what I'm preparing to do. Standard Chartered, which is almost $1 trillion asset manager, they're not quite on the level of BlackRock, but they're up there with the big boys, right? They got their big pants on. So they're putting out notes to their clients saying that they think a Bitcoin ETF will be approved in Q1 of 2024. Now, obviously, them saying this is not necessarily the truth, because it could be delayed from the SEC, which I'll get into in a little bit. But what you call this is institutional prep work. And so they're now talking to their clients like this is already a done deal. You see Larry Fink talking like this is a done deal. It means that they want their clients to be completely accepting of it when they get on the phone and they pitch an allocation to it. So in Bitcoin, on Twitter, crypto on Twitter, everyone likes things to move in a fast and abrasive and absolute degenerate gains way, where you see these gaming projects pulling 200x, 300x, 100x, right? For these projects right now, people want the quick, fast gains. Well, this is not how institutions work. This note that's being put out is the institutional equivalent of telling somebody, you better have your money ready when I come asking for it in Q1 of 2024, but in an institutional, forceful way, and in a pre-game way that's getting people ready to put money in. So they're all doing it. Now, what do you think happens to a client when they've been prepped to allocate for months through reports, and the client's internal mantra is, okay, Bitcoin ETF is coming, Q1 of 2024. It's inevitable. It's already a done deal. You see Mike Novogratz popping on like NBC, CNBC, whichever, media company he's doing interviews with. It's like, yeah, it's already going to happen. And they're talking like that, guys. And then 2 months goes by, and no one can do anything right now unless they're self-custody their Bitcoin, which anyone could do, right? But people that are moving like 5 million, 10 million, $1 billion, they're not just going to transfer from their bank $5 million into Coinbase and buy Bitcoin and pay Coinbase's exorbitant fees. They're not going to do that. So by the time January comes around, ring, ring, hi, it's, X from SC or BlackRock or Fidelity. Bitcoin ETF is now ready. Do you want me to allocate in for 1% of the fund? The response is going to be absolutely, definitely, because they've been prepped for it. They've been prepared. They didn't give a damn what Bitcoin was 6 months ago. When it was at $16,000, nobody cared except for the smart money, BlackRock, right? Who was accumulating Bitcoin at $16,000? BlackRock, Fidelity, the large institutions. Retail investors didn't care because they're like, oh, that thing's over. That's done. That's why the 1% get richer. That's why the 99%, lose money, because the money moves from the hands of the patient to the inpatient, but the money also moves from the hands to those that are the opportunists. They jump at the lows really fast. And so allocating massive amounts of money to Bitcoin, it's all marketing, and it's happening right under your nose if you can understand the language. Guys, the conversations I've been having with people behind the scenes, I can't really share too much about, but the deals that are going on, not because there's buy orders, there's sell orders, and there's also transfers. Okay. So in order to, and this is what we call, I made another video about this. You guys can check it out on the channel, but think about this for a second. All right. If you go on an exchange and you place a buy order for X amount of Bitcoin to the US dollar, you take your US dollars and you buy Bitcoin. Well, that's going to move Bitcoin's price up depending on the amount that you're purchasing of Bitcoin, depending on the liquidity in the market cap. So if you're coming in with $50 and Bitcoin's market cap is in the billions of dollars, you're not going to move it that much. But when someone comes in with $10 billion on a buy order, that's going to move Bitcoin's price substantially. So why, with all this news happening, has Bitcoin, XRP, not just seen a God candle up to the all-time high? Why is that not happening? It's not because of buy orders or sell orders. It's because of transfers. The money is moving from the hands of the impatient to the patient. And those that are now coming in and slowly taking over the industry, meaning that they're coming to old holders and they're like, hey, we can give you $5 billion, $10 billion of USDT or USDC in exchange for the equivalent of your Bitcoin or your XRP or your Ethereum or whatever it may be. And they do the deal, you get the lawyers involved, you sign the paperwork, and you do the transfer that doesn't affect the price on the exchanges. So the retail money, the dumb money, doesn't know what's going on because they don't see the price doing anything when the elite are accumulating more. And when you look on the blockchain, you can see these whale wallets, and there's like whale watchers and whale stats that you can go check this out. Nobody knows who those wallets are, but who do you guys think those are? Institutions. So with the Bitcoin ETF coming in 2024, this prep work is lubing up, their investors getting ready for the thrust. So how do you prepare for right now? And what is the risk? Because there is some risk. There is some risk in crypto, and the risk right now is there will be a correction. Now, whether that correction comes tomorrow, in a month, in 3 months from right now, nobody knows. That correction to the downside will happen, and it's most likely going to happen from the institutions selling their bags on the excitement of retail FOMOing in. So we're going to keep you guys updated on this channel on the fear and greed index. We're at greed right now. When we get closer to extreme greed, hey, a correction could happen right now on greed, but the closer we get to 100 on the greed factor, the extreme greed factor, the higher the likelihood of a correction that comes. But Bitcoin pushing upwards into the halving. The past halvings, we've seen corrections and sell-offs happen into the halving, then consolidation periods for like 6 to 12 months, and then Bitcoin goes after that. So that's leading to the end of 2024. So right now, sure, the markets are up. Some of these projects are up like 200%, 400%, 500%. And you're asking yourself right now, should I be buying into the markets right now? Now, here's a take on it, because you have to look at it as an if this, then that. If you buy into the markets right now and the markets go down, did the amount that you put in set you up to where you're hurting financially? If the answer is yes, then you probably invested more than you could afford to lose, and you should dollar cost average on the way up and on the way down, rather than just dumping your paycheck in at one time and then not having any more money to buy the dip. And again, don't buy, don't sell anything we talk about on our channel. Just a practical approach here is I believe it's riskier to not be in the markets than it is to be in the markets right now. And I'm more of a long-term holder. Now, there are some projects that I do like look for good entry points to trade them on the day or the week, but to trade and try and like time the tops and time the bottoms, you'll historically, if you're new in the markets and you have less than, a couple years of experience in crypto, you'll make more money by holding long term and having time in the markets than trying to time the markets, right? Time in the markets beats timing the markets, meaning that if you're trying to like sell majority of your portfolio and wait for the correction to buy in for the dip, but then you don't see that correction of 30% because institutions come in, they pump Bitcoin up to 50K or 60K, and we don't see it correct back down to $30,000, then you just missed out. Then you're having to buy in at a peak, and then you get dumped on, and then you sold too early, you bought back in at a peak, and then you get dumped on by the institutions. And that's why a lot of people lose money in crypto, is because they sell too early, they buy back in on a pump, and then they see the markets drop, they panic, and then they sell out. And when they sell out, then that's when the institutions pump it again. When you just hold and you focus on making more money on the front end. And so what we're working on and what we've been building for months and months and months is our financial education platform to make crypto available for all. Because the average everyday retail investor, you see someone come into the market and, your grandma, your grandpa, your cousins, if they start asking about crypto during Thanksgiving or during Christmas when the markets are rallying, that's when you know the correction's most likely to come. But also, they don't know how to get in. And the on-ramp is still too confusing for some of these blockchains like Solana, right? You have to go through these bridges to do Arbitrum, Solana, Optimism, even to buy, to get Ethereum on a MetaMask, you have to create a Coinbase account. You have to buy Ethereum, then you have to know how to transfer it without losing your funds over to a MetaMask. And then you have to know how to swap on MetaMask using Uniswap. Then you have to know how to bridge over the Binance Smart Chain or bridge over to Solana. So crypto is not that accessible for all right now. And that's where opportunity strikes, because when it is accessible for all, the prices are already going to be high. And if you wait for it to be accessible for all to start learning how to be able to get into crypto and to be able to get into, gaming or artificial intelligence or Solana-based projects, by then it's already too late. When you start hearing your grandma ask you at Christmas or, at birthday parties, start asking you like, hey, how do I get into Dogecoin or Shiba Inu or Bitcoin or whatever, by then it's too late when everyone wants to know. And so a good gauge for yourself is to look at the Google Trends and see what the search volume is, because crypto moves on the narratives of what people talk about and what the media companies talk about. And imagine this, guys. Think with me for a second here, all right? So what company virtually owns the world? What company virtually owns all the media companies? BlackRock, right? Largest asset manager in the world. They got $8 to $12 trillion, somewhere around there. Probably fluctuates each year, but they got trillions of dollars. They control the media companies, okay? They basically, them and Fidelity, which are they're like the same companies, right? These companies own each other pretty much at the top, and they're part of the roundtable discussions. When the ETFs get approved, what do you think they're going to do with their media companies? They're going to basically tell them, hey, all right, we have this script, send it to all of the news anchors and have them read this script and have them put out this news script about Bitcoin being the digital gold, and Bitcoin is back and it's time to invest in Bitcoin now. So all of the retail money, the dumb money, the late money comes into the market, buys it up. ETFs are approved, markets are pumping, everyone's getting greedy. Then all of a sudden you start to see people talking about 100x, 1000x, Bitcoin's going to $500,000, Bitcoin's going to $1 million. And then the institutions are like, got in early. We got Bitcoin at 16 to 30K and everyone's buying Bitcoin at 45K, 50K. And then all of a sudden, who would dump on the markets? Do you think Retail Bob is going to go and sell his $5,000 and that's going to move the markets and create this crash? No. What creates these massive green candles or these massive red candles? It's institutions coming in and selling out large chunks of their bags to take profits. And then that's when we see correction periods of, 30, 40%. So yes, I do believe Bitcoin's going to go up in the short term because it's just too bullish of a narrative for ETFs right now. When a gold ETF got approved back in 2003, 2004, gold pulled a 3, 4, 5, or 7x or something like that. It went from $300 to, $800, $900 when their first gold ETF gets approved. What do you think when the first spot Bitcoin ETF gets approved? That's history, guys. Not only is it going to getting approved, but it's getting approved from one of the largest asset managers in the world. One of the largest asset managers, if not the largest in the world. I mean, is there anyone bigger than BlackRock, guys? You let me know in the comments below. And then there's multiple, right? So when one gets approved, there's going to be blanket approvals. Now, on the other side of the coin, what could cause a crash? Well, the SEC, they have some tricks up their sleeve, and they could find a reason to delay it. So if leading into 2024, these institutions are prepping people right now, well, the prep work creates the market pumps, right? Even though nothing's happened, people are buying the rumors. And then could they sell the news? Well, the markets tend to move to max pain, meaning that if the most likely case scenario or the most expected case scenario, let's just take this scenario. The most expected case scenario is for the ETFs to get approved. Bitcoin's going to pump. Everything's going to go crazy. So people are diving in right now. What would be the max pain scenario? Let's think about that for a second. And then let's also discuss and allocate some emotional intelligence here for how you can prepare in case the max pain scenario happens. And so what would be the max pain scenario? Well, ETFs are coming 2024, prep work's being done. They're getting ready. That alone is a marketing strategy to get people to buy in right now, because people are buying the rumors. Buy the rumors. Bitcoin's rallying up. Bitcoin's almost about to crack 40K. Bitcoin cracks 40K. It rallies up. By the time January comes around, the SEC tries to pull some bag of tricks in their book, and they're like, hey guys, based on USDT, it's not really that stable. It doesn't really have that good of backing. We found some illegal activities with USDT. Bitcoin could have a 51% attack. So there needs to be some revisements to this. And so we have to delay it a little bit further. That delay then cause everyone to be like, well, they just delayed it. They could delay it again now. They can delay it again. And then people don't even know how long the SEC could delay it for. And then all of a sudden, the markets dump on that news. Is that possible? Well, you guys let me know, because I'm not a lawyer. I don't work for the SEC. And a lot of people say that they have to make a final decision in January. But do they really? Let me know, guys. Do they really have to make a final decision? Or is there some possibility for them to delay the spot Bitcoin ETF? Because if they delay it, the markets would most likely dump. The markets would most likely crash. Now, could that be some coincidental matrix level timing that the pumping leading into the ETF approvals is really just the rumors, and the news is a delay? And then that's what causes the market crash going into April, just like the last few halvings where we saw a crash going into the halving, then the consolidation period for 6 months after the halving leading into September to December of 2024 is when they delay to approve it. Then the approval is what creates the final stage of the bull run for Bitcoin to go parabolic and to blow past its all-time high. And then we start to see XRP rally and the other altcoins rally as well too. Could that be the scenario that takes place? Well, that would be a max pain scenario where the crash that happens brings Bitcoin back down. Maybe Bitcoin comes back down to 30K, maybe 25K. I don't think it'll fall much more below that, because the ETFs eventually, and here's the macro here, okay? I give you the micro. So the micro is obviously a correction's coming. We don't know if it's going to happen based on ETF delay, on something else, black swan event. We just don't know. The only thing that you can do is emotionally prepare yourself and allocate what you're willing to risk and what you're willing to lose. But the macro here is long-term. The gross debt of the United States is projected to grow from $30 trillion, $33 trillion, what we're at right now, to over $50 trillion by 2030. So, meaning that the amount of money on the money printer is just going to keep going, regardless of crises, collapses, real estate market crash, banking market crash. If the banks have another bank run, that's good for crypto. We saw that happen last bank run, where the Fed came in, bought up the banks with JP Morgan Chase, and they added to their balance sheet. They erased months of quantitative tightening. They put in QE, and then that's when we saw Bitcoin rally up really fast. And so banks crashing, obviously bad for people that hold over $250,000 in the bank, bad for those people, but good for crypto. Bad for the economy, good for crypto. So if you're not in crypto, it's riskier to not be in the markets than it is to be in the markets right now, regardless of Bitcoin going back down to 25 or 30K. Now, hey, if there's a macroeconomic crash, Great Depression like 1929 to 1940, and it takes a decade plus, 20 years for the stock market or the crypto market to recover, and we just see Bitcoin, see a sell-off and go down to 10K, like a lot of macro bears are saying, well, real estate's going to take a hit, stock market's going to take a hit, everything's going to take a hit. So you're screwed overall, right? Everything would go down. So the risk right now, the potential for upside is so massive in this market compared to the stock market in the early days of the internet, because there's less than $2 trillion, guys, less than $2 trillion in the crypto market. The stock market has what, 70 to $100 trillion in it. The stock market past its prime, it's being held up by the big seven, these 7 tech giants. You know, you got Microsoft, you got Apple, you got Tesla, you got Google, you got the other companies that are holding up the majority of the stock market. And so that just goes to show that there's a monopoly in the stock market right now that's holding it up. In crypto, the monopoly right now is obviously Bitcoin, but that's starting to transition into other altcoins. And XRP will be one of those altcoins. Obviously, Bitcoin will be one. XRP has the legal clarity. Ripple has the legal clarity that they need. The only final step is basically just paying off the SEC a certain amount for selling XRP to institutional clients as securities. But that doesn't change the fact that XRP in and of itself is not a security. By law, the judge already declared that. The SEC already lost. And so all the SEC has to do now is go after the exchange and the other altcoins. So if you guys really want to play it safe in crypto, Bitcoin and XRP are the only 2 plays to play it safe. If you want to get a little bit riskier, then like you're looking at, you know, Solana, Cardano, Dogecoin, and other projects. But then again, you got to be very, very careful. So don't go out there, don't buy those other projects, don't sell those other projects. Watch these videos for educational purposes only. But what I'm doing, okay, my game plan is I'm just holding, man. I'm backing up my truck all the way to the bank. I'm grabbing the bags, I'm packing them and stacking them, leaving no bags left behind, because I believe that the spending power of the dollar is going to keep going down in value. That has proven to be a fact since the dollar was created, and since Nixon took the dollar off the gold standard in 1971. 1971, dollar stopped being backed by gold. Quantitative easing, 2008, George Bush. All of a sudden now, you know, you saw the value of the dollar plummet because they started ushering QE to save the real estate market so they can prop back up homes in America so people weren't pissed off from the subprime mortgage crash. And so they're like, ooh, it's like they got high for the first time on their crack rock of quantitative easing from Jerome Powell. Jerome Powell's like, all right, guys, I got this big crack rock we can all smoke. And, you know, all the presidents, all the politicians like, ooh, well, that was nice. That pumped up the stock. That pumped up Google. Oh, that pumped up Microsoft. I made a bunch of money. And all those institutional people started making massive amounts of money from the little quantitative easing crack rock that they put, to where they got addicted to printing money. So by 2030, they're going to keep smoking crack. Now, eventually, a crack addict is going to have a massive withdrawal if they get off of it. They cannot get off that train. And the only way to get off that train is by getting on the blockchain. So I appreciate you guys for watching this video. I appreciate you for taking the time to subscribe to the channel. If you want to see more videos like this, again, drop the projects you're most bullish on below. I made a video about the top 10 crypto projects below $1 that I believe are going to crush it. And the majority of them, right, are already doing very well. The ISO 20022 is being implemented right now, November. The banks are already on it, guys. They're getting ready to flip the switch, and the payment rails are almost ready by 2025. You better be ready now, because we still got 2 years to back up our trucks so we can go camping on the beaches of the moon. So I'll see you on the next video. I will see you on BULLRUNNERS.com. Get ready for the launch of our financial education platform, where we are redefining finance by making crypto accessible for all to help you rank up now. So I'll see you on the next video. I'll see you on BULLRUNNERS.com. As always, you know what to do. Stay bullish.